Hey traders, welcome back. It is Monday, March 9th. Hope you all had a nice day and had some winning trades. So let's get right into it. The markets just wrapped up one of the most dramatic reversals of the year. And if you blinked at the wrong time, you missed the whole story. Because when the opening bell rang this morning, it looked like all-out panic. The Dow was down nearly 900 points. We had gapped down super hard over the weekend, as would be expected with what's happening in the world. The S&P 500 and the Nasdaq were each sliding more than 1.5%. Overnight, crude oil had spiked to nearly $120 a barrel, which is the highest level since 2022. The Strait of Hormuz, the narrow waterway that handles roughly 20% of the world's seaborne oil, is still essentially closed thanks to the Iran war. And on top of that, last Friday's jobs report showed the U.S. economy lost 92,000 jobs in February. The stagflation playbook was fully in play. Higher energy prices, a weakening labor market, and a Fed that has nowhere to hide. Then, around midday, 3 words from Trump flipped the script. He told a CBS News reporter that when it comes to the Iran war, quote, "The war is very complete, pretty much," end quote. He added that Iran has, quote, "no navy, no communications, no air force," and apparently that was all traders needed to hear. The sell-off reversed hard and fast. As for me personally, as I've said a million times, I'll believe it when I see it. I would love it if the war was over. That nothing would make me happier, but I'll believe it when I see it. But back to the news today. By the close of the day, the S&P 500 was up 0.83% to 6,795.99. The Dow recovered all its losses and then some, closing up 239 points, or 0.5%, at 47,740. And the Nasdaq ripped 1.38% higher to settle at 22,695.95. Here's the thing though, this is still a market under pressure. The Nasdaq dipped below its 200-day moving average intraday for the first time since May of 2025. And you know how important I think the 200-day moving average is, so that's a pretty big deal. This is not a line that technicians take lightly. It did bounce back above that line by the close, but the warning shot was definitely fired. The clearest pain today was in cruise stocks. Carnival got absolutely wrecked. It was down more than 6%, making it the worst performer in the entire S&P 500. Royal Caribbean dropped around 4%, Norwegian fell nearly 5%, and it was Norwegian's 7th straight losing session. The reason for this isn't complicated. It's all right there in the math. Oil at nearly $100 a barrel is a direct hit to their fuel costs, and unlike Royal Caribbean, Carnival doesn't hedge its fuel exposure at all. On the winner's side, semiconductors came to the rescue again. Broadcom and AMD each surged over 4.6%, giving tech the fuel it needed to lead the comeback. Defense names like RTX, Northrop Grumman, and Lockheed Martin stayed green because this war has been a tailwind for them since day one. So here's what's setting up for the rest of the week. Oracle drops earnings tomorrow after the close, with a massive AI cloud story to prove and a stock already down over 50% from its 52-week high. Then on Wednesday, February CPI hits. Economists are expecting headline inflation around 2.4% year over year, but with oil having gone absolutely nuclear this month, that print could shock in either direction. And with the Fed's next rate decision 1 week out, every data point right now carries double the weight. So, where are we at right now? The war is supposedly almost over, but again, I'll believe that when I see it. Oil is pulling back, and the market still has a lot to prove. So, I expect a pretty wild week ahead. It's only Monday, and we had a crazy day. I don't expect things to get any calmer in the next few days. But we'll see what happens. So until tomorrow afternoon, have a good evening, and I'll see you back here soon. Bye-bye.